Hello, everyone. Welcome back to Financial News. My name is Ron Jankowski with Channel 4 and Palos Heights, and my co-host is Paul Munichel with Ameriprise. Today is September 6th, 2022. Paul, the year is going by very, very quickly. We're heading into all kinds of things going on in the marketplace. I'm going to let you take it from there, and this morning, Ameriprise sent us some notes of what's taking place this morning, and I'll do that after you're finished.
Thanks, Ron. Today, I am going to hit on the natural gas looming crisis that we're hearing about on the news and give you a little bit of data points on that. So, looking at last week's natural gas prices hitting a 14-year high, crossing $10 per million per British thermal unit. That's on the New York Mercantile Exchange. Now, meanwhile, offline Freeport LNG, about a fifth of U.S. LNG production, could be online by November, boosting domestic natural gas demand and prices if the U.S. has a harsher than expected winter. Natural gas prices could surge further. Now, Congress could offer legislation ahead of the midterm elections to limit liquefied natural gas, LNG, exports, even as Europe depends on American LNG to sever trade ties with Russia. Otherwise, they could face voters angered about sky-high natural gas and electricity bills. Last week, Europe's natural gas price, now that's the Dutch TTF hub, it hit $84. And adding to the European energy crisis, Russia's reducing gas flow to Europe on August 31st, using a 3-day maintenance outage as an excuse. Even though Nord Stream 1 is already running at 80% below capacity. Now, in shipping, the average spot rate in December to lease a 172,000 LNG carrier was $250,000 per day. By July, it was over $300,000. Building a similar tanker cost around $180 million last year. Now it's $248 million, and it can't even be delivered until 2027. Now, Flex LNG, a leader in LNG shipping, estimated that a single ship loaded with 172,000 M3s of U.S. LNG could be sold in Asia for an arbitrage profit of $204 million. The same cargo sold in Europe could bring $201 million. Asian versus European bidding wars could continue to push prices higher. So there's a lot to look at here with the natural gas and the costs, and with winter looming. We got to keep our eyes close on this and see what it's going to bring.
And if you have an opportunity to lock in a fixed price on your gas, I think you should probably do that.
Yeah, I'm not sure how that works. I know people do it. It may or may not be a good idea, but worth exploring.
Yeah, exactly. And then with gasoline prices going up and liquid gas going up and into some who knows what level of pricing, that does not look good. I just hope Congress can step in and do something to cap all this.
Something needs to be done somehow. I don't know what the solution is, but smarter people than me should be able to figure this out.
Exactly. Well, we pay them dearly, so they better work for it. The Ameriprise had sent the following this morning. The U.S. stock index futures are higher to start with this morning, a new month following 3 weeks of better than a 1% decline for the S&P 500 index.
Yeah, well, last week's market was pretty rough on to the downside, and we're hoping this week is better. That's all we can, the market's heading into typically what may be a rough spot for it, but we'll see. It should be trading on data and news, which forthcoming could turn things around. We'll see.
Hopefully. Global equity markets are noted as mixed, with modest gains across Europe and flat to modest gains across Asia. So there's
No
a,
real direction.
No,
Yeah.
no, exactly. Just going to say that U.S. Treasury yields are higher with gold, base metals, ag commodities, and the U.S. dollar narrowly mixed. Again, there's no direction. Crude oil posted modest gains over the holiday weekend after OPEC announced modest production cuts for October, and that is not good.
Yeah, I mean, modest though being the key word. We'll see how high energy prices may rise. It hasn't moved much recently, but you never know.
But you know, the I think the key there is the holiday weekend. People are going to be consuming more fuel, more gas, more whatever, and
Yeah, there were a lot
this
of
is-
a lot of cars on the road this weekend that I saw.
Right, there really were. And you know, people are not using the airplane anymore, so they're going to drive. So S&P 500 for the year to date is a minus 16%. Dow Jones year to date a minus 12%, and Nasdaq they're saying is year to date a minus 25%.
Hopefully we can get those numbers better before the end of the year. Maybe hopefully better this month. We'll see.
I hope fourth quarter is going to be better. That's
We
all
all
we
do.
can hope for. Okay, Paul, if there's nothing more, stay with us. Paul is going to bring our next show called Your Money. He usually has an interesting topic. Stay with us. We'll be right back. And we're back with Your Money. Thank you for staying with us. Paul has an interesting, as he usually does, topic, how alternative investments may fit your portfolio. And what does that mean, Paul? And I'll let you take it.
Thanks, Ron. You know, people are familiar with stocks, bonds, and cash, but today we're going to talk about a different type of investment, some alternatives, and there's many of them out there that may or may not be right for your portfolio, but worth considering. You know, when we look at the state of the markets this year in 2022, where both stocks and bonds experienced declines, at least in the first half of the year, it may have you thinking about other investment options. So if you're wondering how to further diversify your portfolio, alternative investments are one option to consider. Some alternatives include real estate, commodities, hedge funds, private equity and private debt, and venture capital. Before you dive into these, let's go over what you should know about these non-conventional assets. You should be sure to seek the advice of a trusted financial advisor who can help you evaluate your risk tolerance, time horizon, and whether alternatives could have a suitable place in your portfolio. Now, a different kind of investing is what alternatives bring. As the name implies, they're not mainstream investments, and if included in a portfolio, should only make up a small portion of it. Whatever percentage is right for your portfolio, could be 15%, could be 20% as a rule of thumb, could be less. But the appropriate amount will vary according to your portfolio, so that's why you need to confirm with your advisor before taking any action. But commodities can include natural resources, such as crude oil, wheat, corn, and coffee. Trading typically occurs on the futures market, which means the investments are more complex than typical securities. Real estate includes publicly traded real estate investment trusts, otherwise known as REITs, which trade on the stock market, or private REITs exchanges, which have different investment requirements. Investors may also invest directly in land or property. Looking at private equity, private debt, hedge funds, and venture capital, they're all available to individual investors through professionally managed funds. These segments of the markets were off limits to all but the wealthiest investors and institutions until recently. Such assets are more accessible today than they were in the past, and like other forms of alternatives, can play a role in the right portfolio for the right person. Now, the potential benefits of alternatives, let's look at that. The primary benefit of including alternatives in your asset mix is portfolio diversification. An effectively diversified portfolio can help you generate more consistent investment performance over time. Historically, some types of alternatives have shown the potential to hedge against the negative impact of weaker performance periods in stocks and bond markets. Further, alternatives may be a hedge against higher inflation. These type of assets have the potential to keep closer pace with rising living costs. Now, of course, there are potential challenges with alternative investments. Alternative investments are a long-term portfolio position. You need to be certain that you won't need to liquidate assets early to get money committed to alternatives. In addition, some alternatives aren't subject to the same level of regulatory oversight as other securities. Be certain you fully understand the nature of the investment you select and the terms of the offering. It may not be as easy to determine whether a specific investment is truly appropriate without significant research or professional guidance. To that end, as always, talk to your advisor about how alternatives can most effectively be incorporated and which types are a good fit for your own portfolio. And as I say every week, if you're working with an advisor at home, that is great. But if you're not, or if you're seeking a second opinion, feel free to give me a call directly at 708-226-3412.
Paul, you had mentioned a whole lot of options that are out there, and for the average investor and saver for later in life and has a portfolio, you really need some guidance. You really need someone who's on top of every option to make sure it fits your portfolio objectives.
Exactly.
Otherwise, you're going to be shortchanged down the line. You really have to pay attention to that.
Right. These things can get complicated.
Yeah, very
and you want to make sure, just like you said, they fit your portfolio. What might be right for you might not be right for me. We've got to figure out it's individual advice is what you need to be getting.
And if you can't meet your objectives, at least you'll know that.
Exactly.
And you'll be aware of it long before and make alternative decisions to compensate or whatever.
Everyone's investing for something different.
Yes.
Someone might be investing for retirement 30 years from now. Another investor might be investing for income right now. Another investor for stability. Another investor for growth. Everyone's different. So these things can fit a portfolio, but they got to be the right portfolio for the right person.
Well, thank you, Paul. That was very, very important for the viewers that are investing, and those that haven't talked to their financial advisor better do so quick. Excuse me. So for Paul Munichel with Ameriprise Financial and myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you